Well, thank you for joining us for this Financial Preparedness for Peace of Mind workshop. My name is Erandi Garcia. I'm the program specialist for Hospice Giving Foundation. And our mission, Hospice Giving Foundation believes in living fully and dying peacefully. We are an independent nonprofit organization serving Monterey and San Benito counties since 1997. And we are grant providers for quality of end-of-life care and services. And over the past 24 years, we've given $28 million so far. And today's speaker is Chris Toscano, CPA, partner at Hayashi Wayland, and he'll be doing a great presentation for all of you. So I suggest you get some, if you have paper and pen handy, that would be great. And Chris, the floor is all yours. Let me know if you need your presentation now.
Okay, before we go on then, River, is that your first name?
No, my name is Diana. My husband's name.
Oh, you're Diana. Okay, all right, Diana.
Yeah,
so we can hear you now. Do you want to share with us why you're joining us today for the presentation?
My husband has cancer, and we are making plans for end-of-life possibilities. And I'm gathering and trying to learn what we need to do to be as prepared as possible, legally, financially, emotionally, etc.
Okay. Well, very sorry to hear about your husband's diagnosis, but so glad that you are joining us today. And you are in very good company with Sherry and Michelle, because interestingly enough, before I introduce my background, Sherry was kind enough to join us at the Rotary Club of Carmel by the Sea. It was a couple years ago now, and I thoroughly enjoyed her presentation. And tonight I will be actually using some of her comments in her presentation because they're so poignant. So Sherry, I hope you don't sue me for plagiarism, but or slander. But yeah, you taught me quite a bit in that presentation, and I have just begun to build on top of that.
Okay, thank you.
So with that being said, my background is, as Erandi alluded to, I am the partner in charge of Hayashi Wayland's Estate and Trust Group. We are based in Carmel. Our main office is in Salinas, but we have various groups. We have the audit group and we have the tax group as a whole. And then a subset of the tax group is our specialty group, Estates and Trusts, and that's the group which I lead. And so I deal daily with exactly what Diana is describing, her particular situation. And I know both Sherry and Michelle can identify with that also, because this is what they do probably as well on a day-to-day basis. And there are so many thoughts, emotions that are occurring at this time, as in Diana's situation, that it's nice to have a background of how to address this situation, because your energies and your focus need to be, in your particular case, Diane, on your husband, and not with a lot of these other items. So hopefully I'll share some ideas that will give you peace of mind, give you a recipe, if you will, for organizing some financial data. That's also what Joyce had talked about in her introduction, and be of benefit to you. I originally moved to the Monterey Peninsula back in 2006. I was a partner in a small firm in the San Joaquin Valley. I'm originally from Los Banos. I don't know if anybody recognizes that name or knows where that is, but it's not too far away. And after moving here, I became involved with a very small accounting firm, also here in the mouth of the valley, right around the corner behind the Crossroads Shopping Center, because the owner of that company had passed away unexpectedly. And the family and I had some mutual connections. They asked me if I wanted to manage the firm, if I wanted to purchase the firm, or if I wanted to close down the firm. And I told him that, well, let me manage it for a couple few years and see what we can do with it. And then I'll give you my assessment. Well, after a very short period of time, I realized that the clients were wonderful. So we didn't want to close it, but I did not have very many resources. We were a very, very small firm. There were only 3 CPAs in the firm and a couple bookkeepers. So I began to talk with some of the various organizations in the area. And I saved Hayashi Wayland for last because I thought that that was going to be the best fit, and my reasoning was correct. We came to agreement very quickly, and the client base that was at this small firm that I merged into Hayashi Wayland is exactly like what I work with here in the Carmel office. Lots of estates and trust work, and as I described earlier, various families that are going through these same kind of situations that Diana is. So I've been a partner with Hayashi Wayland since 2015, and I actually merged in that small firm a year and a half before that, and then very shortly after that, the partner group invited me to become a partner. So with all of that said, let's go ahead and move on to and Rhonda, are you going to handle the slides for me? If you would, please, I'll have you bring that up. And we'll go to the second slide, please. And since we're such a small group, I would encourage you to raise your hand through Zoom if you have a question, and we can address questions as we're moving through the presentation. And I don't know if anybody else has a hard break at 6. If we go over a little bit, that's okay by me. I don't know, Rondi, is that all right with you? Rondi, is that okay if we go a little bit over?
Yes, it is.
Okay. All right. So why is estate planning? What is estate planning, and why is it important? So let's go to the next slide, Rondi, please. The main reason is because your estate planning documents speak for you when you are no longer able to speak for yourself. And if you do not take anything away from this presentation other than this one statement, then I feel successful, because it's so critical, your estate planning documents, because once you're no longer here, they cannot be changed. They are irrevocable. And so it's really, really important for you to have those documents say exactly what you want them to say for you. Okay, Rhonda, you can go ahead and go to the next slide, or the next screen. So the key information about estate plans, you'll see all of the various documents encircling estate planning. Does and Rondi, can you unmute everybody and then remute them? Do you have that ability as the hostess?
Yes, I do.
Okay, so go ahead and unmute everybody, because I'm curious if to get feedback. What is the common theme of all of these documents that are located around estate planning? The wills and the power of attorney, advanced healthcare directive, trusts, and probate. Does anybody see a common theme in these documents?
Legal doc.
Exactly. That was Diana, right?
Yes.
Okay. Thank you, Diana. You can mute everybody again, Irandi. And that's exactly right. These are all legal documents. So I don't want to mislead anybody today. I am a CPA. I deal with the numbers, if you will, of estate planning and estate administration, but I work extremely closely with estate planning attorneys, and there are a number of them, not only in the Salinas Valley, but mainly here on the Monterey Peninsula. And it's critical to work with the estate planning attorney for my clients, because it's not only a legal matter, but it's also a financial matter. And you'll see in some of these a screen in a few screens where there are some other key players in dealing with estate planning. But for right now, I would suggest that you keep in mind the most important individuals are the attorney for the legal aspect and your either CPA or tax preparer for the financial aspect of your estate. Okay, Arandi, we can go to the next screen, please. So obviously a very good place is, where do I start? And starting with your estate planning goals is very comparable to any other plan. You have to plan your work and you have to work your plan. And in this particular case, you have to plan your estate work and then you have to work your estate plan. But if done properly, it should flow naturally. And as I described earlier, allow you to not be detracted from what's important at the end of life for either yourself or your spouse or other family members. It's to be able to spend time with them. So if these documents and your plan are in good working good shape, if they are contemporary, they've been reviewed fairly recently, then you can spend that very important, critical, and valuable time with your loved ones. So one of the first steps is to have your personal and your financial information available. That would involve, obviously, your bank accounts, your investment accounts, if you have any insurance documents, ownership papers of real estate or other types of investment, and as well as retirement accounts. And then it would also be a very good idea to have a list of your personal property. And we'll go into this in a little bit more detail in some of the screens. And for this plan to be effective, the best way to start is to analyze this situation with your advisors. And here are the key advisors. I alluded to I didn't allude to, I stated the attorney and the CPA or tax preparer handling your legal and your financial matters. Your wealth advisor is can be very critical. If you have a brokerage account, if you have some type of an investment account, or if you have a wealth advisor that helps you with your retirement accounts, that individual should be involved with your attorney, CPA, tax preparer to make out a nice estate plan. Another individual, if you have insurance policies or annuities, would be your insurance broker. So these are the four individuals, if you have the various kinds of assets that I've described, that could be so critical in helping you to begin to create those goals that I referenced on the previous screen, as well as put together a nice comprehensive contemporary estate plan. Okay, Rondi, let's go to the next slide or next screen, please. So some of the key information about estate plans are going to come from your will or your trust. And there actually should be a third item on here. It was on one of the very first screens, and that is the Advanced Healthcare Directive. So those three documents right there will give your advisors, as well as your family, the goals that you set out and the direction that your estate administration needs to take. So this would be, if you do not have any of these three documents, this is what you need to do as soon as possible. Very, very critical to have these three documents. And as I said at that very first screen that showed the various legal documents encircling the estate plan, I will not be giving any legal advice this evening. I can't do that. I'm not professionally trained nor licensed to do that. So I will be giving you layman's responses and recommendations and comments about these legal documents. But as far as the actual construction or the preparation of them, I'm going to ask you to seek out that that attorney of yours to help you draft your will if you don't have one, a trust if you don't have one, and that all important advanced healthcare directive, because no one has a crystal ball. I mean, God forbid something happens to any of us this evening or tomorrow, but we don't know. And I think after this last couple years of COVID, we should be very prepared for any occurrence. And the documents that I'm describing, the wills, the trusts, and the advanced healthcare directive will do that for us. In regard to the will, it generally, and again, these are layman comments that I'm going to share with you. They generally deal with property distribution, guardianships, and various preferences that you have with your either personal or real property, or items of very close emotional ties to you, such as your pets. A lot of times there are provisions in wills for exactly what happens with your pet. So if that's of importance to you, make sure and share that with your attorney, so that becomes part of your will, and your wishes are carried out for you when you're no longer here to carry out your own wishes. In regard to the trusts, there are mainly two types of trusts. There's the revocable trust, and just by the definition, revocable means that it can be revoked, which means it can be changed. That's a very common term used for living trusts, because living trusts are revocable. And then in the very general sense, if a married couple has the typical A/B trust arrangement, when the first spouse passes, half of the estate generally goes into an irrevocable trust. And that's support for what I was describing earlier, that when you are no longer here to speak for yourself, your trust document and your will speak for you. And so half of your estate, when you pass, will become irrevocable in again, as I described, a very general A/B trust. And they use that terminology because the B trust would be the one that would become irrevocable, and that would be half of the estate assets that belong to the deceased spouse. And there will be provisions from that deceased spouse in their will and trust that dictate how the half of the estate assets will be treated. Very commonly, those assets are kept in that irrevocable trust, the B trust, for the surviving spouse to use the income off of that. And then when the surviving spouse eventually passes away sometime down the road, then the estate as a whole will be administered, because I probably should have described this before I made that comment, but the B trust is the irrevocable portion, and the trust A is generally the survivor's portion, or continues to be a revocable portion for the surviving spouse. And that's that concept right there. I'm going to stop right now and see if there are any questions on that, because I want to make sure that's very clear. A lot of my clients that come in to see me don't understand that concept when the first spouse passes, and that's very unnerving for them. So are there any questions about, I'm just, again, describing a very general A/B trust arrangement. There are can be variations of that, and some very sophisticated estate plans that involve C trusts and some other kinds of trusts, but I'm going to keep it very simple for right now. So any questions on the A/B trust structure? And Arandi, I can't see all the participants since the slideshow is running. I hope you can and can help me if anyone raises their hand or has a question.
I can stop the slideshow for a second and
Okay.
do we have any questions?
Okay,
Okay,
All
we're
right.
good to continue. Let me bring it up again.
okay. And then we'll go on to the next slide, which is naming your beneficiary. So on the right-hand side of this screen is a list of various types of beneficiaries: the spouses, domestic partners, the children, parents, business partners, charities, trusts, etc. Here again, these are extremely important to name in your estate planning documents, because once you are no longer here, those beneficiaries cannot be changed on your portion of the estate. And as I was describing on the previous slide or previous screen, the first spouse that passes will have a B trust, and that spouse who passes will name beneficiaries. If the beneficiary is other than the surviving spouse, then that beneficiary or those beneficiaries named in the B trust are not allowed to be changed by the surviving spouse. And that's the reason for the structure of the trust that gives the spouse that passes away the authority to name beneficiaries and have their wishes carried out when they have passed. I will say that most of the time, as I mentioned earlier, the spouse, the surviving spouse, is the beneficiary of the B trust, basically receiving the income, not the corpus or the principal of the B trust would be the assets that go into it, that are funded into it, that are titled into it. As an example, let's say that a couple had $1 million brokerage account, and the first spouse that passes is the husband. So the estate is worth $1 million. I'm ignoring any other assets. I'll just keep it simple with one brokerage account. So the estate would be worth $1 million. The husband passes away. A B trust is set up. One half of that brokerage account, or $500,000, would go into the trust B, and the other $500,000 would go into a survivor's trust, trust A. The survivor's trust A is revocable because it functions just like a living trust. The trust B is the irrevocable trust, because that trust is speaking for the husband that passed away, and the trust document is speaking for that husband who can no longer speak for himself. So normally what would occur in a situation like that is the income earned off that $500,000 that's in trust B, the irrevocable trust, would go to the surviving spouse, the wife. And then she would also receive the income off her $500,000 in her survivor's trust. But once the wife passes, then the attorney would need to look to the estate planning documents again to see who are the residual or remainder beneficiaries of that estate plan. It could be their children, it could be nonprofits, it could be a pet. There's just a number of beneficiaries that it could be. And again, I'm referring to that list on the right-hand side. So a beneficiary at the bottom of this screen is any person or entity who receives the death benefit if you die while your life insurance policy is still active. Now that they're touching on insurance policies, and I'm going to talk about that in just a little bit. Oh, an important point about beneficiaries. When it comes to examples like I gave, the brokerage account or your home, your personal property. Those are generally fairly straightforward as far as who the beneficiaries will be, as long as it's stated in the trust document. But when you have a retirement account, 401k account, 457 plan, an IRA account, insurance policies, any of these kinds of assets have a characteristic to them, which is called a beneficiary declaration page or pages. It could be a number of pages, but there's a beneficiary declaration document that's associated with certain kinds of assets. It's imperative that you keep that beneficiary designation page up to date and current, because those assets, the 401ks, the 457s, the IRAs, and various types of insurance policies, not all, but various types, depending upon the product, will not be part of the trust. If you have a living trust, they're held outside of the trust. And the reason is because they have this beneficiary designation page or pages. That's what informs the attorneys, the courts, the families, the beneficiaries, who is to receive that asset upon the passing of an individual. And that's basically what happens when someone passes away and an estate is administered. A lot of what is taking place is updating the title of assets to correspond with the trust planning documents. But in the case of those special assets I referred to, 401ks, 457, the IRAs, some insurance products, they don't need to look to the trust document. They just need to look to that beneficiary designation page. And what's very interesting, I've found this on a number of occasions with my clients, is they will have an old beneficiary designation page in their files. And so when someone passes, they present that beneficiary designation page to the custodian of that. And let's just use an example of an IRA. They'll present that old beneficiary designation page to the custodian of the IRA, and the custodian will say, "Oh, I'm sorry, that's not the most current beneficiary designation page we have, and our computer system does not reflect that." So it's critical that you know exactly the beneficiary designation document that the custodian of various assets has. And I always recommend to my clients that they not only request a copy from the custodian, but then they also call the custodian after they've received that document from the custodian and ask the custodian to bring up their file in the computer system at the custodian's place of business and confirm that the same name is in the computer system that a printout was provided to you. As you all well know and probably have experienced in other situations with computers, sometimes they don't match printed documents that may be in files. And so it's critical that you have the most current one and it matches what's in the computer system of the custodian. So I can't emphasize that enough. I hope I didn't beat that to death, but that is really important, because if the beneficiary designation page is not what your intentions were, and you pass, there isn't anything that can be done about that. Your surviving spouse or surviving family member will not be able to change that. They will, I mean, they could by going to court. It could be very expensive. It could be very time consuming, but the easiest thing to do is just to verify that that beneficiary designation page is up to date. Okay, next screen. This is one that's probably very popular with Hospice Giving Foundation, because I mentioned at the very beginning, your estate planning documents will designate beneficiaries when you pass, as well as remainder beneficiaries. And many times, individuals would like for their surviving spouse or family members to receive something upon their passing. A lot of times they would like nonprofits, very important nonprofit entities that serve a purpose that's near and dear to their heart, to receive a portion or possibly all of their estate, especially if they don't have any children, or they don't have any pets, or they don't have any close family members that might be nieces or nephews, et cetera. Then a lot of times the nonprofit organizations are part of that bequest that is left behind by the passing of somebody. So if a nonprofit is near and dear to your heart, again, I can't encourage you enough to get that in writing, get it into your estate planning documents, and try to be as specific as possible, because sometimes the language is a percentage, but the way those provisions are written sometimes can be confusing. It's more advisable to be very specific with amounts. And that's something that you can discuss with your estate planning attorney as to what is the most straightforward and easiest language to include in those trust documents, so that there's no question upon passing. Okay, next screen, please. Now, this is definitely where we get into the really important aspect of these documents, which are legal documents. The durable power of attorney is a legal document, but it principally addresses the financial aspect of your estate, whereas the Advanced Healthcare Directive, by its name, obviously deals mainly with your health wishes and your medical wishes. Again, the Advanced Healthcare Directive is a legal document, and both of these documents need to be thoroughly reviewed by you and make sure that they are explicit, very explicit in what your wishes are. Specifically the Advanced Healthcare Directive, because this is where, and Sherry and Michelle could probably do an entire hour presentation on just the Advanced Healthcare Directive. But it's critical when you are incapacitated and are no longer to speak for your health concerns, that the individuals you want to represent you know that and are able to speak to your medical professionals taking care of you. All right, let's go on to the next screen, please, which is avoiding common financial planning mistakes. If your planning documents are not reviewed periodically, and generally we recommend at least every 3 years, unless there's now this is from a financial perspective and a tax perspective. If there's a major tax law change or changes, as we experienced with the Tax Cut and Jobs Act a few years ago, if you will recall, in 2017, that was significant. It's when those types of laws are new to the books, then we are always encouraging our clients to reach out to their estate planning attorney and do a review to make sure that the existing estate planning documents coincide with the current tax law. Very important. But some of the other mistakes are, you'll notice here in the center of this screen where it says who gets what. If you do not specifically state what your wishes are, then somebody may get something that you don't want them to get. and somebody that you wanted to get something won't get something that you wanted them to. So very critical that you are as detailed as possible with who gets what. Next, what type of funeral arrangements? A lot of times we take that for granted because we, the living, just figure that, okay, you know, the funeral arrangements have been carried out as per the deceased person. The deceased person isn't able to speak for themselves. And so we don't know whether that's accurate or not. That's why if you have it in writing and very simply but explicitly stated, then you know that your funeral arrangements will be carried out as per your wishes. And then who inherits your property, that's pretty much who gets what. That's kind of a repeat of that. But the bottom line of all of this is what potentially could happen is there could be some fighting. There could be some disagreements. There could be some costly legal ramifications to not being as specific and simply stated in your estate planning documents as possible. Some things that are left to interpretation, and depending upon what type of the amount of the estate that we're talking about, can cause protracted court proceedings, which anytime anything is in court and involves attorneys and is protracted, it's going to be costly. And those are monies or assets of any kind that you want certain individuals to have. And if they are used to defend the documents or the administration of the estate, that could prevent your loved ones or nonprofits or special people in your life to inherit what you would like them to inherit. Okay, next screen, Randi, please. So here are some of the mistakes to avoid, and I think all of you so far have taken the first step, which is instead of lack of planning, you're currently involved in that right now, or you wouldn't have attended this presentation. So that's not a mistake that I think any of you are going to be making. Finances unorganized and are missing information, the next bullet point. And Diane, I think this was a comment that you made. No, excuse me, it was, well, Diana made it as well as Joyce, and that's organizing financial data. My recommendation is it doesn't have to be fancy. It doesn't have to be extravagant. All it has to do, start with something very simple. Take a lined piece of paper and just start writing on each line various assets that you own. And just look around your home. You can start with your home if you own it, and then start looking around your home, and that will remind you of other assets that you have. If you have brokerage accounts, if you have retirement funds, if you have IRAs, if you have insurance policies, if you have annuities, anything of value, jewelry, artwork, you name it. But start simple. It like I say, it doesn't have to be an exotic spreadsheet. Start with a simple lined paper and just start writing down various assets, and to the best of your ability, approximate what the value is. And that's a great place to start. And that will be a dynamic document. It won't, you won't just do this one time and then put it aside. You should constantly review that and update it as necessary. But don't think that it's a monumental task that you have to sit down and you have to write everything and it has to be, complete and accurate. Just start listing your assets, and as well as you can, their current value. And that's a great place to start. And then set it aside for a period of time, and then go back and work with it, maybe in a couple days, and then maybe in a week. Eventually you'll get it to the point where it's a pretty good comprehensive lists. And then you'll see in another couple screens, you should be reviewing that on an annual basis. I don't want to put the cart before the horse. So then the next bullet point is the mistake to avoid is not having a will, not having a trust, or not having power of attorney or that advanced healthcare directive. That's one of the biggest mistakes. But I think I've probably beat that quite a bit here. So I'm confident that all of you that are attending will have at least a will, a trust, and a advanced healthcare directive. The power of attorney, I strongly suggest, but that may become more important sometime down the road when you want somebody to start assisting you with your financial affairs. And then the last bullet point here, not having enough life, disability, and long-term care insurance. The insurance broker was the fourth individual in those key players for your estate planning. Again, the attorney, the CPA, tax preparer, your wealth advisor, and then the fourth individual was the broker, the insurance broker. And depending upon whether you have life insurance products or not, or disability insurance products or not, hopefully you have some form of long-term care insurance. I know that those policies are not quite so popular as they used to be because they have significantly reduced the benefits paid, and the costs of those policies have gone up tremendously because medical costs have gone up tremendously. But still, if you have a long-term care insurance policy, or if you want one and you don't have one, that would be something to add to your list as soon as possible. And this is probably something that I really took away from Sherry. And every time I think about this thought, it reminds me of Sherry, and that is from her presentation. And that is that to avoid mistakes with your estate planning, not only do you need to have a thorough estate plan with all of the documents and all of the legal and all the accounting and the financial aspects, and your wealth advisors involved and feedback, and your insurance broker, et cetera, et cetera. This should all be shared with your family, because if you don't share that with them and you pass, and there are surprises to them upon your passing, you could save a lot of their emotional distress, grief, because they're going to be dealing with a lot of emotional issues at the time of your passing. And so for them to not be surprised, to have various aspects of your estate plan to be totally new to them, could be quite disconcerting at a time when they have enough emotional pressure and they're dealing with a lot of other issues to administer your estate. So sitting down with them and explaining to them exactly what your estate plan is, and that I even think that, sharing the documents with them so that they can see that it's not only your words, but it is the written documents that back that up. There should be a lot of comfort that your family members, even if you have friends involved as far as helping to administer your estate, get them involved so that they know what to expect when you're no longer here, to be able to tell them directly, and those documents are sharing this information with them. It will go a long way in easing their burdens of your passing, and to know truly that what you're sharing with them are your wishes. Okay, Rondi, the next screen, please. So, and this is a reiteration of what I was just sharing with you, is that estate planning is important because it prevents those unintended beneficiaries. You have certain ideas, you've probably worked hard all your life, you've gotten to a certain point in your life where you want to make sure that your loved ones and your friends and any other causes that you have are served by you and your wishes upon your passing. So by having the estate planning, it protects your family, especially those that have young children. There's another very, very important reason for a comprehensive estate plan. The third bullet point down there, or the third point about potentially helping your heirs to save taxes, that could be significant in maintaining as much of your estate for your family, your loved ones, your friends, nonprofits, etc. And then that last point, which I think I covered quite a bit on the previous screen, which is hopefully eliminates family messes. And that's priceless. You can't put a dollar figure on that. Okay, estate planning documents, how to protect the information. So in the first 3 points here have to do with the preparation of the documents, and this will all be reviewed with your professionals, your attorney, your CPA, tax preparer, your wealth advisor, and potentially your insurance broker. That's to help with the preparation. But once you have all of that, then it's very critical to protect those. And that's what the last bullet point there is alluding to. You know, store them in a fireproof safe. If you don't have a fireproof safe, that's okay. If you don't have a safety deposit box, that's okay. There are services out there. There are companies that will protect all of these documents for you. A lot of times law firms now will do that. And there are also there are companies out there that just do this for a small fee. And again, that fee is well worth it because they're protecting those very critical documents that are going to be needed at a very challenging time in either your family, your friends' lives, or whoever you choose to be the executor, executrix, or the trustee, successor trustee of your trust. So we come to the last screen, which is for review and questions. And I don't know if it comes through on your screen, but you'll notice there the little cartoon. And I'm sure I can trust you not to fight over my money when I'm gone. And I don't know if you can tell by the graphic there, but the two kids on the left have a bat and an axe. I can't tell what the woman has on the right-hand side. Can anybody tell what that is? Or what she has? Go ahead and unmute everybody, Rondi, please. Does anybody have an idea? I can't tell.
Can't tell. We can't
if she
tell.
has anything.
Is it a chain?
Is that what it is? A chain?
I don't know.
Well, it's something
One
like
of those chains with
Oh, the ball at the end.
yeah.
Spike ball. Yeah.
Well, needless to say, the bat and the axe are ominous enough. So whatever the woman has, I'm sure it's not very good. But very important point in the lower right-hand corner is that the only person who doesn't need an estate plan is someone who lives forever. So I think that pretty much sums it up. So before I take questions, I'm going to test you all. And I'd like somebody to share with the entire group. If you don't walk away with anything else from this presentation, what should you walk away with? Joyce, you want to take a stab at it?
Say that again.
The question is, if you don't walk away with anything else from this presentation today, what's the one thing that I wanted you to walk away with and remember?
To make sure that I have all the information that I need to give to my estate planning attorney and my the person who does my accounting and have it all written and prepared so that my family would know exactly what my wishes are.
Exactly, because when you are no longer here to speak for yourself, those
Right.
estate planning documents speak for you. Yes. Yeah, very good. Thank you for that. Okay, any questions or comments?
I just want to say, Chris, thank you for mentioning the emotional aspects of estate planning, because as you know, I feel deeply about that. And I think for me, what came across tonight is the importance of not just creating an estate plan that's well organized with documents in place and up to date, but the continual review. This is not a one-shot deal. The circumstances of our life change, our relationships change, and our documents need to speak to that.
Absolutely. And our times are so dynamic now. I mean, with technology and the way things change so very rapidly. And we're even noticing this on the tax side. I'll just speak for as a CPA and preparing taxes. We've never experienced in the last 10 years the amount of tax changes that have occurred, which affect estate plans as we have over I've been doing this for 30 years now. So the last 10 years, even the last 5 years, it's accelerated. So that ties in exactly with what you were just sharing, Sherry. Thank you.
Yeah. And thank you for tonight. This was great.
Thank you.
Oh, good. It's been my pleasure.
Chris, I have one yes.
Any
I have
other questions or comment? Oh, Joyce?
Yes, I do have. I would like very much to obtain a new attorney, a state attorney here in the Monterey Bay area, mainly Salinas or Monterey. I did my. I need to review badly. It's been a long, long time, and I had it done. I think my husband passed 20 years ago this year.
Mhm.
And that was the last time we did the estate planning, and I really need to review that and redo a lot of things probably.
Joyce, is your information, does Arandi have that from signing up for this presentation?
Probably you can email it to me. I think Arandi should have the with the Alliance on Aging, or not Alliance on Aging, but
I do. I do
You-
have all the emails. Once everybody register online, I have the emails and information of every person. So
Okay, if
can-
Arandi, if you would forward Joyce's email information, if that's okay, Joyce,
Sure,
if she sends it to me, I won't give you just one name because I
Right.
don't direct business just to one
Absolutely.
particular estate planning attorney. I'll give you 3 different names. And what I encourage my clients to do when they ask me that very same question is to call up the attorneys and let them know that you would like to have an introductory meeting with them. Most of the time they don't charge. In fact, I'd be very surprised if any do. And you need to meet with them for a short period of time, half hour, 45 minutes, to see if the chemistry is there, if you feel
Right.
comfortable with that individual, and then make your selection. But I recommend that you meet with at least 3. So I'll
Okay.
give you 3 different names, and I generally provide the name of a sole practitioner, a small law firm, which might have 2 or 3 attorneys, and then larger law
Mhm.
firms, which could have up to 10, 12, 15 attorneys, and
Right.
see which one feels most comfortable to you.
Great. The one that I had done in Southern California had just retired this year,
Mm,
and so I
That's
do
fine,
need to
yeah.
take care of that.
Okay, so yeah, I'd be
Joy?
more than happy to share that.
Great.
I also wanted to mention the Hospice Giving Foundation has a wonderful notebook called Notes to My Family,
I-
where you can, organize all this
Right.
financial and legal information. And it would be helpful once you choose the person that you want as your estate planning attorney. That would be a wonderful way for him to work with your estate.
And I can send
Yeah.
all that information via email as well, Joyce. So I can send you the links and I can also send the advanced healthcare directive form if anybody needs it. So And I would also be sharing the slides of this presentation, so you can review it at home.
Okay, great.